Hello and welcome again to another episode of the Uranium Market Minute. Today is Monday, March 14th, and this is episode number 92, which happens to be the atomic weight of uranium. My name is Justin Hune. I'm your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. All right, another very, very volatile day in the uranium space. I'm going to talk about the volatility of this investment in the mailbag section. Before we do that, let's run quickly through the daily scoreboard and check out the charts for the sector. A couple pieces of housekeeping. First of all, tomorrow, Tuesday the 15th, will be our March members only webinar. We again have a special guest from one of the companies that we own and recommend. He'll be joining us. Hope to see you there if you are a member. If you're not a member and you're interested in joining, we do have a quarterly option that would give you access to these members webinars. And also, if you cannot make it to this webinar live, we record it, and that recording and replay will be posted to the website later on in the day tomorrow. With that said, we will not be doing a market minute tomorrow because of the members webinar. So let's jump right into it now. Spot price of uranium slipping down a bit, 58.12 per pound mid-market. That's down a couple of dollars since the end of last week. This is what we're going to see throughout this market, throughout this bull market for uranium, is we're going to see big up moves on big volume. And when the flows come out of spot or just pause, then we'll see traders taking advantage of that temporary lack of buying pressure in the spot market to manipulate the price back down. So we're going to see these higher highs, higher lows, higher highs, higher lows. And this is going to continue to happen throughout this bull market. So absolutely nothing surprising going on here. Sput did not raise any new capital on Friday, but they did purchase another 100,000 pounds of uranium. Trust now sits on 51.7 million pounds of U3O8 with a NAV of 3.1 billion. Their year-to-date total pounds acquired now sits at 10.4 million pounds in about 9 weeks. And they have raised 558.7 million in new capital. They did close the day on Friday at a substantial discount to NAV, almost 4% discount to NAV. And they likely are not even getting close to that 1% premium. So likely not a lot of, not any shares issued today would be the most likely outcome. Although the sector is getting a bit of a bid currently. We still have 3 hours of trading left. So I'm doing video a bit early today. Sput sits on 71.5 million in cash as of the open this morning. And again, their NAV at 3.1 billion is more than 5x of where they started out, 600 million last July. Just unbelievable numbers coming from Sprott. Turning to the ETFs, URA issued the largest daily increase in outstanding shares that we've ever seen, 2.9 million shares outstanding issued. URNM reported no increase in outstanding shares. This is part of what led to the buying pressure that we saw later in the week. And of course, you know, a lot of this, because we're seeing more share issuance coming from URA, likely has to do with the call options volume. The combined outstanding shares, again, made another all-time high between these two ETFs. Since the beginning of the year, the mandated buying from the ETFs, that flywheel we always talk about, 504.7 million in mandated buying from the ETFs this year. All right, let's take a look at the charts. Starting off with URA, down heavy on the day, over 6% down on the day on decent volume. Pretty big down day across the sector. We're seeing stocks down 5 to 10% across the uranium sector. Of course, zooming out, we're still definitely generally in an uptrend here. We had a few strong weeks. In fact, URA was up, let's see, close to 40% over the course of about 6 weeks. URNM was up even more than that. And of course, some of the equities were up even more than that in that small period of time. So even with positive fundamentals, we're still in a volatile sector going to see profit taking throughout this bull market. Even with the trading action today, we still have a few hours left, so we'll see how the day resolves. But we are already hearing rumors that there's a potential trade embargo on the table in Washington, D.C., with the potential for U.S. prohibition on trade in Russia's uranium. So that just leaked out about 10 minutes ago. We'll see how that affects the market if we see any follow through on that news. Either way, pretty nasty day across the sector. Looking at the Sprott Physical Uranium Trust, huge down day, down over 9% this was a much deeper sell-off than we anticipated. Of course, with the spot price of uranium down just a couple percentage points this morning, we're now sitting likely at close to an 8 to 10% discount to NAV, which in my opinion is a very strong buying opportunity for the physical trust. Decent volume here as well. So clearly we're not going to see any money being raised by Sprott today. Let's take a look at Cameco. Cameco holding up better than most in the sector. And most of the time when you see a resumption of a bull market, what you often find is that you'll see some resistance at that previous cycle high, which we just saw. We tapped almost exactly at that cycle high, right around pushing $28 on Thursday and Friday of last week. So of course, we're going to see that pullback, likely make a higher low above this 22.33 level that we saw a week and a half ago. And either way, seeing some profit taking, and I expect we'll find a bottom here shortly and likely resume and break through this high. I do feel strongly that we are going to continue in this uptrend for uranium. All right, mailbag section. Of course, during times like these and days like these, I get the occasional message, the occasional email asking about, Justin, what do you think? What's going to happen to the uranium sector if we have a broad market crash? And there's a crash of epic proportions like the David Hunter is calling for, 60 to 80% sell-off in the sector. These kind of questions, I just have a hard time with these questions because it's pretty obvious that in a liquidity crisis, everything gets sold. And when we've seen kind of this risk-off environment and a drastic outperformance of commodities that are in bull markets, whether that's oil or nickel or uranium or copper, we can see that rotation. We can see that decoupling from the broad market when it's a general kind of sell-off, general risk-off environment. 1 to 2% down days, 3 to 5% down weeks are still pretty big for the broad markets. But an absolute crash, a liquidity crisis, of course, when people are looking for liquidity and trying to go to cash, they sell what they own. It doesn't matter how good the fundamentals are. And I'm not necessarily expecting that, but I do get those questions once in a while. So, but either way, uranium is an unbelievably volatile sector. This is not for the faint of heart. And I see a lot of pain across the retail space on days like this. Even though we're up, 35, 40% over the past 5 or 6 weeks, you're still going to have these big down days like this. And it's very difficult for new investors to understand this market and say, Justin, how can this be moving down like this when the fundamentals are so good? It's just what makes a market. And this market is volatile. So on that note, I'm going to share a couple of tidbits that we typically only share with our members, but they're just general kind of tips for investing in this sector because of the volatility. One, make a rational portfolio allocation to this sector because of its volatility. This sector will hit above its weight. So rational obviously is subjective. Rational to you might be different than rational to me. I might be more confident in this trade because of the amount of research that I've done and what my understanding of this sector, the depth of that understanding gives me confidence and helps to ride out the volatility. Is one reason why we go so deep into the fundamentals with each monthly newsletter, with these monthly webinars. The more you understand, the less the volatility affects you. Of course, it's always difficult to see red on the screen, but anytime you see days like this, go to the weekly chart and zoom out and ask yourself if the trend is broken, if there's anything fundamentally broken about this thesis. If not, usually it's best to stay in your positions and ride it out, and zooming out in the long term, be up greatly. Newer investors tend to try to trade around intraday movements in sectors. It's very difficult. That's the natural inclination, is to try to not lose money ever. And that's just the wrong way to do it. And you're going to have down days. Absolutely nobody is taking the perfect top and perfect bottom with each of these little up moves and down moves and up moves and down moves. To trade in and out of these, first of all, you're never going to have long-term gains, capital gains for your investments if you're doing that. Of course, that depends on where you live, but most folks in most countries in Europe, in the United States, in Canada, etc., have short-term versus long-term capital gains. Trading in and out on swing trading will always put you in the short-term capital gains position, which is taxed at a higher rate. Second of all, it's very difficult to book those gains, consider the tax implications, and then perfectly buy the dip to re-enter those positions. Most of the time, it's better simply to ride it out. So This sector hits above its weight. What does that mean? When the sector moves, it moves really, really strongly. So being overly allocated in this one sector is very, very risky, okay, because of that volatility. Number two, do not use leverage. If you don't want to be a day late and a dollar short, if one of the sector corrections forces you to sell out because of margin calls, don't trade uranium with borrowed money. Three, do not become overinvested in any one name. Pay attention. So our focus list of stocks that we choose in this sector is spread across, I believe right now it's 10 different positions, and one of those being an options trade. You can buy the ETF and own, 2/3 of everything in the sector. You can take a shotgun approach and buy 20 different stocks, or you can have a well enough diversified portfolio of some choice holdings. That is what we have. That is what we recommend always. Four, do not let daily price movement be the determinant of whether you believe your investment thesis is valid. A day like this where you see the ETFs down 6-7% does not invalidate the thesis. The thesis of being long uranium and of nuclear being a growth sector and of the cost of uranium, the price of uranium going drastically higher from here, does not mean that every single day is green. I mean, I shouldn't even have to say that, but it's pretty obvious. Number five, know yourself. Invest amounts that are within your comfort zone. If you were extremely uncomfortable on days like this, your position sizing is probably too large, and you should really reconsider that. I have at times in my investing career, let's say, I have been over allocated to a single name, and I am more than happy to even sell at losses just to distribute that risk out into some other names. That's of course, up to each individual. I have a couple of emails that come into me consistently from people saying, Justin, what the heck is wrong with this company? Come to find out after a bit of digging, this person owns 3 stocks in the uranium space and 75% of their position is in one company. It's like, that's just not the way to do it. You get overly emotional about the movements of a single company. You have to diversify, and you have to know yourself. You have to know what you can stomach. What type of volatility can you handle? Can you handle the sector at all? Maybe not. Maybe this is not the sector for you. If it is, the safest bet is probably physical in the ETFs. And if not, then it's obviously, beneficial to make some choice investments in companies that you feel will outperform the sector, outperform the ETFs, and then diversify across a number of names. That's exactly what we do. It's what we recommend. It's what we will continue to do. All right, hang in there, everybody. And I do still feel very confident there's exciting things coming for the sector, and it probably is coming soon. Take care. I won't see you tomorrow. We will be back on Wednesday, the 16th. Be well. Cheers.